A very good afternoon, ladies and gentlemen. It's 12:22 by my clock. It's time for us to resume. I hope the cup of coffee and tea was to your liking, and it is now time for us to segue towards our next segment. In this segment, there are going to be 3 panel discussions spanning 25 minutes each. All the 3 panel discussions are going to cover different topics, and thereby post the panel discussion, we're going to be breaking in for lunch. Now it is time for us to move ahead to our next session. Digital Finance Stack, Account Aggregator, Embedded Finance, and Cloud-First Models. We're talking about redefining the access, consent-based data sharing, and of course, talking about financial inclusion. This session explores how the financial institutions and fintech are leveraging the data frameworks to build secure, scalable, and customer-centric financial ecosystems. With that being said, I'd once again like to re-invite on stage as our moderator, Dr. Ritesh Jain. Let's give him a big, big round of applause. He's been so kind to us that he's accepted our request for joining us once again as the moderator. Of course, he's the advisor to the World Bank Chair Payments, IFF, and board advisor, investor, former COO of HSBC. Any talk with him, I'm sure, can enlighten a lot of us. So thank you so much, Dr. Jain, for joining us. We'd also like to take the opportunity of welcoming Avinash Jha, who's the Senior Vice President and Head Institutional Sales of Knight Fintech. Let's give him a big round of applause as we welcome him. We also have the co-founder of Finarcare Analytics, Nikhil K, joining in. Somebody who's building innovative data products using open data standards and specializes in financial data infrastructure and consent-driven architecture aligned with open banking principles. We also have our dignitary joining in is Dr. Archita Pal Chaudhary, who is the Assistant Professor at St. Francis Institute of Management and Research, a finance academic, researcher specializing in financial strategy and ESG investing. She has a PhD in finance, MBA, finance and MA economics. She will bridge the academic research with real-world market applications. With that being said, may we request all of you to kindly be seated and Dr. Jain to take it forward.
So you have to wear me again. Thank you.
You are invisible.
Oh.
Yes.
Oh, thank you. So it's pleasure to be here again, and the topic is very interesting. We talk about the digital finance stack, and what I heard is the words like financial inclusion as well, and that is very close to my heart. Working in the space for well over a decade and a half, and my other hat, where I have got a responsibility of the financial inclusion sitting in the World Bank in GPFI, which is the Global Partnership for Financial Inclusion. I'll not bore you with that in terms of what's happening in the global market in the financial inclusion, but the only nugget that in the country where we are sitting today, we have got 89% inclusion. However, financial literacy is roughly around 24%. Now that's where I've got a challenge with the financial inclusion in the country. So the financial institutions have significant amount of responsibility to disseminate literacy to their customer. Because it's not their problem. Let me tell you what is the problem. The problem globally is the whole definition of the financial inclusion is slightly flawed. So as a definition from the OECD, World Bank, you name the institution, if you have one financial product, you are financially included. Unfortunately, that is not true. And that depicts in the India, because of the Jan Dhan Aadhaar mobile, Jan Dhan account, we have 89% inclusion and above, but that's not really the financial inclusion that we can talk about. So, I'll come directly to the digital finance stack. People don't need access to account. What they need is access to money. Whether it's a retail or the MSME, 90% of the economy runs on MSME. Let's talk about from the retail perspective first. So, we're going to sell a panel, those who know about the finance pretty much in detail. We talk about the digital lending. And the way digital lending was a decade back versus today, it has transformed, right? Now, because we have got the real-time payments, we have got real-time rails, we have got real-time frauds happening. So how do you see the digital lending has changed, especially in last 5 years in this economy? Over to you, buddy.
Thank you. So I'm Nikhil. I'm one of the co-founders at Finarkin. At Finarkin, we've been working with financial institutions, helping them publish and consume financial data, primarily on the account aggregator rails. But what we've realized is the need for data just keeps expanding, and I think with change in regulation around data privacy, and that has also changed up the landscape significantly. I would say digital lending, let me talk a brief about my experience around digital lending and financial products. So I had a bank account which I opened, I think, when I was in 10th or 12th grade. And one of the first financial products I came across in college was Slice. I think Slice at that time, in its prepaid card sort of format, was doing a very different business model, and I remember the journey, the application experience. It was definitely a refreshing change compared to what I was used to when I'd opened my savings account. And since then, I graduated. I worked for a few years. I have started up, and we've been doing Finarkin for the last 6.5 years now. And I would say the velocity at which things have changed has been phenomenal. Obviously, I think with great speed comes great challenges, and there are different new attack surfaces is how I would put it, in the sense when it comes to digital lending. Most of the fintechs, or let's say the product managers at these companies are optimizing, how do we make sure the journey is seamless? How do we make sure, let's say, like during COVID, a lot of the video KYC stack got reinvented, and I think the regulator also came out with regulation around it, right? So each of these steps, be it KYC, document data collection, onboarding, and of course underwriting, has gone through incremental changes to ultimately streamline the digital lending stack. I still believe there is a lot more to be done. And when it comes to the different challenges around the speed at which digital lending has changed, especially for retail, I would say definitely what happens in, let's say, meeting rooms and technical discussions versus awareness amongst the public, I think there is a mismatch there. So I think we need to cover that gap, where there is also general awareness amongst the public when they're using technologies like account aggregator, or they're using, I remember around UPI AutoPay, there have been a lot of dark patterns which have sort of played out in the market, which is why NPCI is also now taking a relook at, how they want to allow UPI AutoPay and collections, yeah.
Thank you, Nikhil. Nikhil, so the view I have is in terms of we have evolved over the period of time, and how we were assessing for the credit profiles as well, that has changed, right? And I have a very clear view in terms of not only in India, but from the global market perspective as well. In India more so, that we need to focus on behavioral data. So Archita, I would like to come back to you on this, that the changes that you're seeing in the market, especially from the finance perspective and being a PhD in the space, how do you see the behavioral data is impacting the lending in the whole lending stack?
Very good afternoon to everyone present here. In line with your digital lending concept, initially it was a very traditional credit score assessment system. Nowadays we have moved to an alternative data scoring system, where we are taking other financial institutions, all the financial institutions are taking data from the social media, from anywhere, wherever the data are available, both for the individuals as well as retailers. I mean MSME also. People with a little bit of credit worthiness, they were initially entitled in the traditional system to have lending, to get the facility in the lending. But nowadays, people without any credit worthiness of their payment system, they are also getting facility, which is a plus point, I think, in this arena. But along with that, alternative credit scoring system has also its demerits also. So whenever we are thinking of using those type of data and how this assessment will be done, that computing system has to be good enough to understand whether the person needs to be given loans or not. Because ultimately at the end of the day, any of the financial institution may suffer if they cannot recover those. NPA will go up for those banking system. So in line with this, I think alternative data, whatever we financial institutions are planning with planning to use, they need to be very careful about this, which data and what sort of analysis, which models they are going to fit into, and what biases that those models have, and then what type of mitigation strategies that we are going to follow over there. These things I need to take taken care of.
Thank you. Chitra, you have uncovered a can of worm, or rather open a can of worm over here while the explainability comes into the play. And we all know that where we are heading in terms of the data, because garbage in, garbage out, and that's what the reality today. All right, with the AI Summit and AI Expo happening, as well as over here, we are talking about the AI quite vigorously.
Yeah.
The challenge that we have is, one is the data, and the second thing is the governance. So I see that as a governance challenge rather than just the data challenge.
Yeah, governance challenge definitely is there. How regulators are taking initiatives and what kind of mechanism strategies they are taking, that is very important. But at the same time, regulatory sandboxes are there whenever your fintech companies are coming up with any of the proposals or plans. And with regulatory sandboxes, definitely we can avoid mass losses. So I think regulatory sandboxes need to be, channeled properly, or need to be prepared efficiently so that we can minimize losses, those type of losses.
Thank you, Chitra. Avinash, I'm coming back to you. Especially, when we talk about the landing, the first thing comes into the mind is NDCs in the country, right? Because that is the most pain point, where the new to credit customers are going to go. Because when we look into the whole gamut of the landing, regulators have been very cautious for obvious reason, because of the NPAs and what has transpired in the recent past as well, right? So how do you see the co-lending space growing, and how they are getting benefit of not having enough for the NDCs? Are they really better off or the worse off?
Thank you, Dr. Jain. Hello, everyone. Myself, Avinash. I head sales and strategy at Knight Fintech. So it's a right question, appropriate one to ask as of today. So co-lending, when we talk about, just to give you a background about what is co-lending is a process whereby there's this lender who needs a loan. He's approaching NBFC. NBFC is funding 20%, and rest of the 80% is funded by the bank. So it is a joint loan which is being given to the borrower. So this process is actually a cumbersome when it comes to accounting reconciliations and all, and there where a specialized system comes into picture. Coming back to the question, whereby anyone who is new to credit, so I think there where exactly the problem statement lies, that somebody is there new to credit, whereby not proper formal documents are there in place, and then taking this borrower to the credit chain of the NBFCs and banks is a challenge. However, what we have seen is with the advancement into the underwriting technologies, if I may say about AA coming into picture, or GST based lending, or invoice based lending, or probably the cash flow based lending. If we are working upon all these segments, then definitely it is possible to actually pull in all those unorganized or the segment which was not previously able to get the loan from formal channels. But with these tools of underwriting, it is possible to get them into the ecosystem of NBFCs. And certainly with if it is there with the NBFCs, then definitely through co-lending, bank can also participate. They can also take the pie under the co-lending arrangement.
Thank you, Avinash. Avinash, it's a very interesting question over here, which is coming up in my head. And while we talk about the landing and the different shape and form of the landing, right? Some of them regulators understand pretty well. Some of them they slightly less understand. Let's put it that way. Now, and one of them is buy now pay later, right? I can see a smile on Nikhil's face as well, and Archita. So buy now pay later in the global market. When I go out of India and being in the global market regularly, we see they are going in the double digits. However, the buy now pay later have not been appreciated well in the country, and a lot of businesses have gone underwater. So how do you see that what needed to be done, which have not been done in a right way, and what needs to be done now?
I think it's all about education at the borrower's level, because today also in India when we are talking about DPDP Act or we are talking about AA, the main core of these acts was to actually enable the borrower to actually understand and have a control over their own data. So it is more about who to be given consent, for how many months or days the consent is been given to share the data, if we are talking about on AA platform and all. So, but when it comes to borrower, they don't understand that these things are for them. They are more towards how quickly I get the loan. So they are using, for them, AA is a platform where they can easily quickly get the loan with very minimum number of documents to be submitted. So that is the main problem statement, that in BNPL also, whereby people were more interested in getting the payment and not thinking about how they should be, whether they will be able to repay the loan on time or not, whether they actually need that payment or not. So it is more towards educating the borrower and understanding the tool in their own favor. So it can do wonders for someone who actually in great need of money, and probably they want to buy the raw materials and execute it. At that time, these things, they can use this tool in a more efficient way. This is what I can say about it.
Thank you, Vinash. So that's very interesting because when you talk about the lending, in the universal banking business model, there's only one model which makes money, is the lending. Let's be realistic. Everything else around it is a service. Calling a spade, right? Now, when we talk about the lending in the buy now, pay later, especially you mentioned about the customer consent, understanding of the customer. And if I go back in the history, the best financial product have ever been developed in the financial industry is the credit card. Who's going to give you interest-free loan for the 30 to 45 days without any collateral? That's a credit card. But the whole business model around the credit card is the revolvers, right? Bank loves the revolvers. That's what the business model. So in the buy now pay later, that really didn't change much, right? The only thing that changed, that in some of the jurisdiction that you are taking the credit profile into the account, and others you are not taking the credit profile into the account. So it comes down to the financial literacy then, right? Because the customer is not aware. So whose responsibility it is, Nikhil, that from the platform's perspective, because you are building a phenomenal platforms which are providing the open banking sort of capability to and enabling the financial institution to offer a variety of the products, whose responsibility it is to literate customer? Because again, the financial literacy is roughly around 24% in the country.
Yeah, so I would say instead of trying to reinvent the wheel, we should look at what works in the country today. Established behaviors are extendable, right? So for example, scanning a QR code, making a payment. I think there have been so many large consumer apps in the UPI space which have spent enough money to build and establish a new behavior. I would say in terms of different credit instruments, a revolving credit line is by far the most capital efficient, because I think even accounting is basis drawdown and things like that. So I feel the initial buy now pay later wave that came up, companies grew too fast too soon, and I think rightly so, large regulated entities waited it out, waited for a boom and a bust cycle to play out. And before you know it, if you make a credit card payment today, you get all your cards. Major card issuers are offering like a Pay in 3 or like a BNPL sort of product around it. I would still say the card as an instrument is relatively inefficient compared to a revolving credit line, and which is where I am in particular pretty bullish on credit line on UPI. I believe two things work for it. One is obviously the established behavior. So payment through UPI is already an established behavior. I think that works in favor. You do not have to reinvent the wheel or establish new behaviors, which tends to be very expensive for consumer apps. Second, I think if you look at credit on UPI itself, that itself has been a good indicative ramp up. Thirdly, I think when you ride on some of these common rails and DPIs, I feel the entry barriers and the costs associated with running these structures tends to be significantly commoditized. And then it becomes a play of distribution and innovation to some extent. So I am in particular very bullish on credit on UPI being actually the next BNPL wave for India. Yeah.
Thank you, Nikhil. So when we are talking about the credit, I can tell you another projection that we have put up together. And now I love credit. And so when we talk about India, let me give you the global perspective as well, because we think the Western markets are much better in terms of the financial literacy. Let me tell you, 78% people in UK, they don't know when they make a minimum payment on the credit card, they incur higher interest rates. So understand the gravitas. 78% people don't know that making a minimum payment on a credit card bill is incurring higher interest rates. So understand about the financial literacy in those markets as well. So we are not worse off. We are almost at par. But we can't be proud about it. Right? So we need to get better. Now, when it comes down to the credit, the interesting part is, today, yes, you mentioned about the credit cards, 100 odd million credit cards in the country. As of last year, $32 billion in outstanding credit card debt. My own projection, in the next 10 years, we are looking at $160 billion only on outstanding credit card debt. So if you are building something in the market, look into this space. It is going to be phenomenal. So I love lending, right? In the lending, how do you see, because we are on the real-time payments, real-time frauds, lending, significant challenge. How do you see the customer behavior changes when you actually identify, because NPA is a major challenge. So when you identify the customer, the early warning signs. So let's put it in a word. So how do you do the early warning signs, as well as how you can mitigate that risk?
So from that perspective, what you, Dr. Ritesh, you said, I think customer needs to be more and more educated, as you told. In comparison to that, 78% people over there in abroad also, they are not so financially literate in our sense. But here also, though we are not in a poor figures, but still I think making them an understanding about which products at what point of time, what is going to be repayment position, how you're going to repay all your loans and everything. So it has to be there in a sync, because that level of financial literacy has to be there. And then whatever mechanism, because when you introduce something like this, you need to understand one thing, there has to be a compliance also with that. So compliance, whatever products that you are coming up, compliance has to be there embedded, not a separate. Earlier what is used to happen, this is a product and this is a compliance, I have to follow that compliance. Nowadays the compliance has to be embedded into the product. Now when you are looking into this one, like the way Nikhil was talking about UPI, my little one, 4-year-old also, he knows that if mama carries the mobile phone, she will be able to pay. So that is in their mind. So this way, this is also one sort of a financial literacy, I must say. But along with that, if I am unable to pay my credits on time, then the way it brings a negative impact in the entire economy, it is also the responsibility of the regulators to give them an understanding about what is going to be the changes, patterns that we need to follow over there. And what regulations that they need to follow, because as long as you are not financially literate enough, you won't do this, what I feel.
Thank you, Achita. Avinash, I'm coming back to you, especially when you talk about the lending, right? So there are multiple nuances in the lending, because it's easy to lend the money, but it's difficult to get the money back. We all know that in personal space or the businesses as well, right? So what are the different nuances that you think are the key? Three of them. When it comes down to the lending or the co-lending space, that's what you enable your customers as well.
Yeah, hi. So, so when we talk about lending and digital lending, I can segregate into, or there are many branches towards it. Now, one is co-lending, second one is embedded finance, right? Then the digital lending, the probably the original source. So there are many issues in each and every one of these lines, if I may say. So there are many things that we do. When we talk about co-lending, it is more about matching and matching each borrower, matching each originator with the lender, right? So when we onboard a originator for a lender, we have to make sure that, the policy of the lender is going to be accepted by the originator, number one. Once they have on the paper, it has been approved and being matched, then when the case comes, we have to actually see whether the originator, which is a smaller NBFC probably, has done those due diligence, have taken those documents, have given the lead as per the agreed SOPs or not. Once that is done, then the lender would be able to probably approve that case. And with the new guideline, which is about CLA, which is co-lending model 1, if you all must be aware about, that it requires a parallel underwriting. So the borrower is actually waiting. So earlier it was that borrower is been already given the money 100%, and bank is going to take some time, and then they are going to disburse the leftover 80% to the NBFC's account. So there was a time with the banker to actually take their process in deep and disburse the money. But with the new circular, now the borrower is waiting. NBFC have to actually give their approval, and then in the limited time, the main lender will also be giving the approval. So all those things requires a platform whereby a real-time decisioning can be done. On a real-time basis, we have to take care of the certain regulatory compliances. We have to make sure that the amount is being disbursed directly to the borrower's account and not to the NBFC account. So there are plenty of things, and this is just 10 or 20% of the problem statement. Once the disbursement is done, then the real problem starts, that accounting, reconciliation, repayments, the splitting of repayment into 20% to the NBFC account and 100% for the bank. So all these nuances which comes into picture, so we are able to take care of that piece.
Thank you, Avinash. Nikhil, I'm coming back to you very quickly on this one. Now, what is the one thing that you find is more challenging as well as interesting in the whole lending space in terms of the product that you're building or you're planning to build now?
Sure, I think what I find interesting is beyond, let's say, the initial onboarding side of things, I feel the real long-term value for a lender is in collections. So lending money is easy, collection is the business that lenders are in. And I believe that with access to increasingly more granular real-time data, lenders who are able to innovate around collections proactively will get a compounding edge. It will not be visible overnight, but it will compound.
Thank you, Nikhil. We always have this joke that the NBFCs are running the call centers, right? That's a call center business rather than a lending business. So one last thing, 10 seconds each. What are you excited about the lending in the country for in next 10 years?
I think risk profiling of the borrowers needs to be done very professionally, and definitely we are in a cloud first models we will be using. The models, to what extent these models are biasless and the models are having their accuracy, we need to check, and based on that we need to grant these loans. I think that can reduce this NPA.
Thank you, Achita. Nikhil?
I'm very excited about credit line on UPI. I believe it's a positive sum addition to the credit market. It will not cannibalize the card base. Rather, I see it as a means to expand the market. There's interchange. There is a more efficient capital structure. I think credit line on UPI is going to be the next big wave.
Thank you, Nikhil. Avinash?
Certainly, the 2 points. Then embedded finance. What I can see that today every one of us are there on lots of internet platforms, be it Car24 or Swiggy, Zomato. Lots of data is there, and giving credit to all these unserved masses going to be a big future for upcoming years, many more years.
Thank you, Avinash. So thank you, everyone. It's a pleasure to be here. And thank you for your valuable insights.
Thank you so much. And ladies and gentlemen, on that note, of course, firstly, a very warm thank you to Dr. Jain for curating this conversation for us and all our eminent panelists. May I take the opportunity of inviting Mr. R. Kannan to please join us and help us in this felicitation along with Mr. Prashant Pereira. Please do us the honor, and they both have been very pivotal in their space, but also pivotal in curating this entire concept along with Dr. Narendra. Allow us an opportunity to now request both of them to give the token of appreciation to our dignitaries on stage. Thank you so much. To Avinash, firstly, thank you for joining in. Thank you to our moderator, Dr. Ritesh Jain. Thank you so much. Thank you, Nikhil. Such an honor always collaborating with you. And once again, thank you, Dr. Archita. Thank you for joining us. Bringing the academic excellence with her current profile. Can I please urge all our panelists to step forward, allow us an opportunity to capture you all in one frame. And their smiles are only going to get better if you continue the applause for them. Thank you so much. God bless. And let's move ahead to our next conversation.